Hi, thank you for joining me. It is November 8th, 2018, and it's 6:30 p.m. Eastern Standard Time. Let's get started, shall we? We've got some information to give you. So we're going to start the screen share and open it up so you can see what I'm talking about. And there we are, New Zealand dollar, US dollar, so NZDUSD. My entry price was put in on June 25th of 2018, and it's been here since then. It's a good 6 months almost. And it was put in at 0.68310. Now the lot size is a 0.01, keeping it minimal. Minimal risk and profit. The longer I stay in, the more chance I have to actually getting what I've taken the time for. My stop loss is at 0.62310, which is back at the 7,000. Hang on one sec, I'll go down to the 4-hour. And oh, it's 6,000 pips or $60 negative. Because I changed it, it was below $10 negative. I moved that stop loss to a negative $60, so only 6,000 pips. And it's still in a good area. My take profit is at 0.74310, which also is 6,000 pips or $60 profit. Now, the reason I have it from 1-to-1 ratio to risk to profit, keeping the stop loss and take profit at the $6,060, it keeps my risk factor low, as well as my margin level well above my possible 100%. Most brokers will allow you to do 100%, and then you start getting stomped out. They kick you out of the trade, and they could take your whole account. So I keep my margin level at the 4,838 plus percent to make it so there's no possible chance of being stomped out. Stomped out at the the stop loss price of $60 compared to a balance of $999.50. Not that big of a deal, right? It's not that big of a deal. Keeping my stop loss at that margin level means I can go a long time without having to worry to be stomped out or kicked out of the trade. My take profit is also at the 6,000 or $60 profit. And it can change. I can move it as soon as this account, this trade goes into profit. When it hits the 500 mark in profit, I can actually move my stop loss above my entry price, making so I don't lose any of the profit. And it's a no risk trade. There's no risk after that. And being that it's a negative $8.06, last night we actually had negative $8.23. So it's not yesterday, negative $4.87. So it's bouncing a little. And there's nothing to worry about here. Nothing at all. Because the longer you're in, the more apt it's going to do exactly what you want. Now, I've been asked why I don't put in more than one entry price. Because obviously, I can do just that, right? No, that's incorrect. With this broker, they have a FIFO rule. First in, first out. So any additional entry prices, one moment. Welcome back. Had to stop for a moment. So we're going to get our screen share back up. And there we go. And as I was saying, take profit and stop loss are at the identical 1-to-1 ratio. Many people have asked me, why don't I put in no more than one entry price? Because it cuts down your margin level. You don't want to go below 500% in my way of thinking, and you don't want to make it so that you are stomped out of the account or stamped out of the trade. That is why I keep my margin level over 4,837 points, 26%, give or take. Life continues, right? Now, I was asked why I trade in the daytime chart, and this is why. Going down in the minute time chart, there's not a lot to be seen here. It's just, for instance, say you just picked up a book, a 600 to 800 page book. How much do you read in that minute? Not much, right? It's got your attention, but you can't do much with it. And on a naked chart, which is what this is, all it has is the entry price, the stop loss, and the take profit. There's no indicators on here. So it's very, very risky to trade on anything below an hour. You cannot really see. Going into the 5-minute time chart, you see movement, yeah, and it's adjusting accordingly, but I wouldn't risk it, not unless you've been trading for at least 6 months and know the way to trade. You have the education as well as have the ability to mark up your chart. Without it, it's very, very high risk. Going into a 15-minute chart, you can see quite a bit has happened over the last 15 minutes. But that's all you've got. It goes back to October 18th of 2018. There's not a lot of time there. So you don't have a clear picture on the smaller time chart. On a 30-minute time chart, now put it back to your book. More than likely you've read the first chapter of your book. At least. Depending on how quickly you read. You still don't have an idea of what that story is going to be, how it's going to end. And that's the same with a chart, a time chart on a trade without the indicators, without the education. You can see something's going on, but trades have a tendency to always surprise you if you don't have a longer period of time to see how the trend is going with the trade. Because when you trade right, but you look left. And I'll explain that as we get further along. Now, don't get me wrong. With the indicators, with the knowledge, and the education, trading on a 30-minute or less time chart is fine if it's in your comfort zone. If you've got the experience, go for it. Have fun with it. If you don't, I wouldn't advise it. Going into the hour time chart, you can see a little bit of the supposed indicators. I say that because I don't write them up, but I can see head and shoulders. I can see support and demand. I can see resistance. I can see how it's working. But it only goes back to August 15th of 2018. Still not enough time to get the clear picture, the clear story, the complete story of this trade. Going into the 4-hour time chart, you can definitely see a difference here, quite a bit of difference. And you can see what's going on. And I'll be honest with you, up to about 3 months ago, this is where I would stop. Because I thought, hey, no problem. It goes back to December 8th, 2017. Almost a year, right? No. It's not a full story, not a complete picture. That's why I stay in the daytime chart. Because if you look at the daytime chart, it goes back to February 19th of 2014. Close to 5 years. And you can see, like when I said, you trade right, but you look left, you put your cursor where it's sitting. And you can see where the trade's at the negative $8.24. And then you go left to the last time, not immediate last time, but the last time when it came up to this amount. And it is right in here. So the price is currently at 67486. It opened at this time in 2016. It opened at 0.67819. So I would advise going a little further left until you actually get as close to what it would be. 6.7, here we go, right here. So we're right in this area, which was back in March of 2016 to April of 2016. That's more than enough time. And you can see what the trend is for this trade. You can see how many times it tested and retested the support and the resistance, how many times it broke through and turned around and turned the opposite direction, which is what it's doing right now. So my guess would be, hang on, watch, sit on your hands if you must, but keep an eye on this. It is literally going to turn and go exactly into our take profit, and we are going to see how it succeeds. Now I'm going to stop my screen share so I can get any questions, because I gave you quite a bit of information here. Where do I get my signals? Good question. I have 5 areas I go get my signals. One is Stevenson Lindor and Warren Wright, who are educators with iMarkets Live. To get access to them, you need to be part of iMarkets Live to get their training. And they'll take you from a naked chart beginner all the way to a marked up chart advanced. You won't be led astray. The third place that I get it would be Christopher Terry, who is the CEO of iMarkets Live. And he has over 25 years of trading experience. So he would be a good idea, a good resource to know what to do and put your faith in how he teaches. The fourth area is my sponsor, Tracy Walker, who, like I stated, is my sponsor through iMarkets Live, and she'll teach you how to mark up your charts, find your entry price, find when to get in and when to get out, set up the indicators, mark up your chart again, as well as know what to do. She's ideal. She runs webinars and summits to teach people how to do trading. And the last area is Swipe Trades, which is an app on your smartphone through iMarkets Live that you can take the trade with you wherever you go. You do not have to sit in front of a computer to do this. Once you have the education through iMarkets Live, you can trade anywhere you want to trade. You're not glued to your home. You can have a life. That said, I'm going to give a couple more moments. Going once, going twice, and gone. And thank you for joining me tonight or this morning, whenever you're seeing this video. And you go and have a fantastic remainder of your day or night, and I'll see you tomorrow. Bye for now.